Homestead insurance, what it costs plus what it covers. So you are running a micro homestead and you want to know about homestead insurance. Let me break it down for you in plain talk. No fancy fluff. Just the real deal about what it costs and what it covers for folks like us here in the United States of America. First off, homestead insurance is not some magic shield that covers everything on your 5 acres and a goat. It is basically a version of homeowners insurance, but tweaked for people who do a little more than just mow the lawn and grill on weekends. If you are selling eggs at the farmer's market or running a YouTube channel from your barn, you are already in a gray area. Regular homeowners policies were built for suburban life with a dog and a 2-car garage. Once you start bringing in cash from the land, things get sticky fast. Let us talk money first, because that is what everyone wants to know. What does it cost? Well, it depends. I know that sounds like a cop-out, but hang with me. For a standard home in the United States, the average homeowner pays around $1,500 to $2,500 a year. That is your baseline. Now add a micro homestead business to the mix, and insurers start sweating. You have chickens that could get loose. You have customers coming to pick up soap or honey. You have a YouTube setup with lights and cameras in a dusty shed. All of that is risk. If you are just homesteading for yourself and not selling anything, you might get by with a normal policy. Maybe it bumps up a couple $100 because you have outbuildings or a wood stove, but once you start selling things, the game changes. Most carriers will want you to add a home business endorsement that can run you $200 to $500 extra per year. Not terrible. But if you are doing more volume, or you have people visiting the property for workshops or farm tours, you are looking at a full-blown commercial farm policy or a small agribusiness policy. That is where it gets spicy. Those can start at $1,000 a year and climb to $4,000 or more, depending on what you are doing. Location matters too. If you are in Tornado Alley or wildfire country in the United States, your rates are already high. Add livestock and old barns to that, and underwriters get nervous. Florida and California are rough right now for any kind of property insurance. Some folks in those states are paying double what their cousin in Ohio pays for the same coverage. Age of the home matters. Old farmhouses with knob and tube wiring. Yeah, that will cost you. Insurers hate old wiring and old plumbing. They also hate wood stoves if they are not installed by a pro with a permit. You can expect a surcharge or a straight-up denial if your setup looks sketchy. Your credit score plays a part, too. It is not fair, but in most states, your credit history impacts your insurance premium. Got a few dings. Yeah, your rate goes up. Got great credit. You save. Bundling helps. If you put your car and your homestead policy with the same company, you usually shave off 10 to 20%. So if you are paying $1,800 a year for homestead coverage and $1,200 for auto bundling, could save you $400 total. That is real money for feed and seeds. Deductibles are another lever. A higher deductible means lower premium. If you can stomach a $2,500 deductible instead of $500, you might save $300 to $600 a year. But you have to actually have that cash sitting around if a tree falls on your coop. Do not pick a deductible you cannot cover tomorrow. That is how people get wrecked. Now, what does this thing actually cover? Here's where people get burned. They assume homestead insurance covers the whole homestead vibe. It does not. A standard policy has a few main buckets. A dwelling coverage is the big one. It covers your house. If a fire takes it out or a windstorm rips the roof off, dwelling coverage pays to rebuild it. That is usually set to the estimated rebuild cost of your home, not what you paid for it. With lumber prices and labor costs in the United States right now, rebuild costs are higher than ever. Make sure your dwelling limit is high enough. Being underinsured is a nightmare. You do not want to find out after a fire that you are $8,000 to $1,000 short. Other structures coverage is next. This is huge for homesteaders. It covers detached stuff, barns, sheds, greenhouses, chicken coops, fences. Usually it is set at 10% of your dwelling coverage by default. So if your house is covered for $300,000, you get $3,000 for other structures. That sounds okay until you realize your new barn cost $5,000 and your greenhouse was $15,000. You can buy more coverage, but you have to ask for it. Do not assume it is automatic. I have seen folks lose a barn and only get a fraction of the rebuild cost because they never upped this limit. Personal property is the third bucket. This covers your stuff. Furniture, clothes, tools. For homesteaders, this gets tricky. Your personal chainsaw is covered, but is your commercial grade cider press covered? Maybe not. Most policies cap business property at $2,500 on your premises and $500 off premises. That is nothing if you have market equipment, a camera rig for your YouTube channel, and a freeze dryer. If you are using it to make money, the insurer calls it business property and limits kick in hard. You need an endorsement or a separate inland marine policy to cover expensive gear. Same with livestock. Chickens are usually covered, but only up to a small limit, like $500 total. Got 50 laying hens worth $20 each. You are already at $1,000. A predator hit could wipe you out and insurance would shrug. You need farm personal property coverage for real protection. Liability is the one that keeps me up at night. This protects you if someone gets hurt on your property and sues you. Standard policies come with $1,000 to $3,000 in liability. That sounds like a lot until someone rolls an ankle at your You Pick Berry event and their lawyer comes calling. Medical bills and legal fees in the United States add up fast. If you have people coming to your property for any reason, bump this to at least $500,000. An umbrella policy is even better. You can get $1 million in extra liability for $150 to $300 a year. It is the cheapest peace of mind you can buy. Loss of use is another piece. If your house burns down, this pays for you to live somewhere else while it gets rebuilt. Hotel bills, rental costs, it is usually 20% of your dwelling limit. Important but not the main event. Now here is what homestead insurance does not cover unless you add it. And this is where micro homestead businesses get nailed. It does not cover your farm income. If avian flu takes your flock or a late frost kills your market garden, your homeowner's policy does not pay for lost egg or tomato money. You need business income coverage or crop insurance for that. Most small homesteads skip it because it is pricey, but know the gap exists. It does not cover product liability. You sell raw milk or homemade salve at the market and someone gets sick. Your homeowner's policy will likely deny the claim because you were engaged in business. You need product liability insurance. For small producers, you can sometimes add it to a business policy for $300 to $600 a year. Worth it if you are selling anything people put in or on their body. It does not cover tractors or farm equipment used for business. Your little lawn tractor is fine. Your 35 horsepower Kubota you use for market garden work, probably not. You need farm equipment coverage. Same with ATVs and UTVs if they are used for work. It does not cover floods. No standard policy in the United States covers flood. If you are near a creek or in a low area, you need a separate flood policy through FEMA or a private carrier. And listen, flood maps are outdated. Just because you are not in a flood zone does not mean you cannot flood. If water comes from the ground up, you are not covered without flood insurance. It does not cover earthquakes. That is another separate policy. Same deal with sinkholes in states like Florida. It does not cover home-based business liability. If a subscriber from your YouTube channel shows up for a farm tour and gets pecked by a rooster and decides to sue, you are in a weird spot. Your homeowner's liability might deny it because it was a business activity. You need a commercial general liability policy, even for small stuff. So how do you actually get covered the right way without going broke? First, talk to an independent agent who knows rural properties. The big online companies are fine for suburbia, but they often choke on homesteads. An independent agent can shop companies like Farm Bureau, Country Financial, or other regional carriers that understand ag. They speak the language. They know a high tunnel is not a carport. Second, be honest about your business. I know it is tempting to not mention the egg sales or the YouTube money to keep rates low. That is a bad idea. If you have a claim and they find out you were running an undisclosed business, they can deny you all of it. You pay premiums for years and get nothing when you need it. Not worth it. Disclose everything, even if it bumps your rate. Third, inventory your stuff. Walk around with your phone and video everything. Open every drawer and shed. Talk through what things are and what they cost. Upload it to the cloud. If you ever have a fire or tornado, you will not remember what was in the feed room. This video is gold for claims. Fourth, look at package policies. Some insurers now offer homestead packages that blend homeowners and small farm coverage. They are built for people like us. Under 5 acres, under $1,000 in farm revenue. They cost more than a standard homeowner's policy, but way less than a full commercial farm policy. You get higher limits for outbuildings, better livestock coverage, and some built-in business liability. Ask for it by name, homestead package or hobby farm policy. Fifth, consider raising animals and crops carefully. Bees are usually fine. A few chickens are fine. Get into pigs or cattle and you are in farm territory, same with acreage. Most homeowners' policies cap you at 5 or 10 acres. More than that, and they want you in a farm policy. If you are right on the edge, think about whether you really need that extra acre for your taxes, or if it is pushing you into a higher insurance bracket. Sixth, document your YouTube setup. If you have $8,000 of camera, audio, and lighting gear in your barn, get it on a scheduled personal property endorsement. You list each item and its value. It costs more, but there is no argument if it gets stolen or burns. Same with that freeze dryer or cream separator. 7, think about dogs. Insurers have dog breed lists. If you have a breed they think is aggressive, they might drop you or exclude dog bites. Farm dogs are working dogs, but the underwriter might not see it that way. Be ready to prove training or use fencing to manage risk. 8th, maintain your property. Clean your chimney. Trim trees away from the house. Keep your electrical updated. Insurers do inspections. If they see a mess, they will cancel you. And right now, in the United States, it is hard to get new coverage if you have been canceled. Do the boring maintenance. 9th, ask about discounts. New roof discount, security system discount, non-smoking discount, monitored fire alarm discount. Stack them. They help. 10th, review your policy every year. Your homestead changes. You added a greenhouse. You started selling tallow balm. You bought a used tractor. Your coverage needs to change too. Set a calendar reminder and call your agent. Do not set it and forget it. Let me give you a real-world example. Say you have a 3-acre spot in Tennessee, 1,800 square foot farmhouse, detached barn, chicken coop, small greenhouse. You sell $4,000 a year in eggs and garden starts. You also make $300 a month from your micro homestead business YouTube channel. Your basic homeowners policy might be $1,400 a year, but that only gives you $2,500 for business property and excludes business liability. You add a home business endorsement for $250. Now your camera gear is covered up to $5,000, and you have $1,000 in liability for business visitors. You also up your other structures from $3,000 to $6,000 for the barn and greenhouse for another $180. You add a $1 million umbrella for $220. Your total is now $2,050 a year. That stings compared to $1,400, but if your barn burns or a fan sues you over a goat incident, you are not ruined. If you skip the endorsements and something happens, you could be out tens of thousands. I have seen it. A buddy in Missouri had a market tent blow into a customer at a fair, broke her wrist. His homeowners, denied it because he was at a market. He paid $18,000 out of pocket. A $350 policy would have covered it. The bottom line for us micro homestead folks in the United States is this: you cannot afford to be cheap with insurance, but you also cannot afford to buy coverage you do not need. You have to thread the needle, know what you are doing on your land, know what money is coming in, know who is stepping foot on your property. Then match your policy to that reality. Do not just grab the cheapest online quote. That policy was written for a subdivision. You are not in a subdivision. You have dreams and dirt and probably a few critters. Your insurance should reflect that. Talk to a human, a local agent who gets it. Pay a little more now so you do not lose everything later. Your homestead is your livelihood and your lifestyle. Protect it like it matters. Because it does. One bad storm or one lawsuit can end the whole thing if you are not covered. And rebuilding from scratch with no payout is a mountain nobody wants to climb. So budget for it, revisit it yearly, and keep hustling on that land and on your YouTube channel. Just do it with a safety net under you. That is the smart way to homestead in America today.